Hello ladies and gentlemen, this is Nathan from MyCryptoParadise. In today's video, we'll look at the Curve coin, which is quoted CRV. Right now, price is trapped between this resistance area near $274 and the support near $125. The big question right now, if the price will manage to break above the resistance towards the previous high and break higher, or will the price retest the support and go even lower? So get your favorite drink and let's get started. First, let's go to the coin market cap. We can see CRV Curve token is ranked number 92 with a total market cap of only $768 million. It hasn't been performing well during the past 7 days and even 24 hours. It actually went down more than other coins. So while there is this bearish tendency, stronger than average pullback might provide this buying opportunity, this deep. We already looked at the fundamentals. In one of our previous videos, we talked about what is the curve, so we will not be going through that in this video. Moving on to the coin 360, the Bitcoin continues to trade near 40,000. In fact, the number of wallets with a balance close to 1 BTC is increasing. And overall, these addresses take nearly 5% of the total circulating supply of the Bitcoin. This is a significant increase in comparison to the previous bull runs, and this is the positive news for the Bitcoin. First off, because the total accumulation is increasing. Secondly, because it makes harder to manipulate the price of the Bitcoin. So right now the accumulation phase is going on, and in the short period of time we should be seeing a significant price action. And just to summarize, we can see that the market is not moving much. Some coins are down 1 or 2%. Clearly this is a consolidation phase in a medium term. Now time to move to the CRV daily logarithmic chart. So this is the original chart we saw in the beginning of the video. And here we have this average price uptrend trend line. This resistance is the very important resistance area for the CRV against the USDT. We had it previously as the support, then the resistance confirmed by the moving average, average price uptrend trend line, and previous support, which makes it a strong supply area at this stage. On the other hand, we have applied FIBs to this overall wave up, and we see that there was this bounce of the 78.6 FIBs. In fact, this level has been acting as the support previously, so there is this double bottom implying that this range trading is ongoing. Therefore, in order for the price to start or continue a long-term uptrend, we need to have a daily break and close above this high at $2.9. Then we certainly will see a further price increase potentially towards this resistance area. While the price is below this resistance, selling pressure will remain high, and in the worst case scenario we can retest this support level. Only daily break and close below this low at $1 psychological level will completely invalidate the bullish outlook, and in this case CRV trend might turn from bullish to a bearish. But now if we look at the bigger picture, same CRV USDT on the daily time frame, we can easily spot that there is a very important support area at $198. We will show the importance of this level in our following charts, but right now we can spot that this is clearly a demand area which is acting as the demand once again. There was the break below this area, although price bounced off the 78.6 FIBs. We can also see a downtrend trend line which was broken previously, and right now it is acting as the support. Finally, we have the ascending channel which has been extended through this low, because this is the original bottom of this pullback. Since we never had a clean break and close below this level, there was this spike produced here, although we failed to close below the spike. This channel shows us that along with the 61.8 FIBs, price also bounced off the bottom of the channel. So there were 3 bounces: bottom of the channel, downtrend trend line, and 61.8 Fibonacci retracement level. And as long as the daily closing price remains above, there are big chances that the price will move up to retest the resistance. Now this resistance is based on 88.6 pips applied to the last wave up, and this level was nearly tested already, where it bounced actually off the 50 simple moving average. This makes this area a very important resistance. So while we hold this support, buyers will certainly attempt to push the price higher. Nonetheless, spikes on the daily time frame below 178 can also be expected, because only daily break and close below this support can send price back to the $125 support area. But as we hold the support, price increase is likely to take place, and if this resistance will get penetrated, we will see further growth towards $345. We will speak about this level as well in our next charts. And finally, what is important right there on this chart is this resistance area at 61.8 fips. We applied this fips to this overall downtrend, and as we can see, this level has been taken out. This implies that the long-term trend remains bullish, because we also bounced off the fips and right now bouncing off this key support area. On the 16-hour chart, what we can see is also key supply demand areas. The nearest demand area is obviously 178, which we already discussed. If you look at this price 1.979 and we go back to our daily chart, we can see that this is the 61.8 fips based on this overall wave up. But on the 16 chart, we have applied another fips to this wave up, and it makes it a 50% fips. So we have two Fibonacci levels exactly at the same price, and CRV bounced cleanly off this level. On the other hand, price is right now between 50 simple and 50 exponential moving averages, which confirms that there is a short-term consolidation going on. First bullish sign will be the break above $2.36, especially the daily closing price above that. In that case, further growth can be expected with a high probability. On the downside, break below this support will increase selling pressure potentially towards the 88.6 fips, and this fips also corresponds to the fips from the daily time frame. Now on the 6-hour chart, we are able to see key support and resistance levels. We already mentioned 178 support area multiple times, and in this chart you can see it is confirmed by 3 fips. There is one which is 50%, then 61.8 and 127.2. And the fibs we used 61.8 from the daily time frame, then we had fibs applied to the first pullback after price topped out, which shows 127.2, and finally we had a fibs applied to this wave, which shows 50%. The very important point here is that price is failing to break below, which shows that the demand and the buying pressure remains extremely high. So while this level was rejected, we also see the rejection of the 50 simple moving average. And as long as we hold this support, we will either witness a consolidation phase or break to the upside. The nearest resistance for the upside move is 88.6 fips, which corresponds to the support area or demand area, and can be expected to be retested, potentially to test the downtrend trend line along with these fips. Break above this resistance will certainly push price higher towards the key level at $345. Now this level corresponds to 2 fibs as well, 161.8 and 61.8. So it's based on this wave up and this pullback, because this is extremely important pullback and the bounce of the support. Now let's have a look at that 1 hour chart where we see the formation of the triangle pattern. The triangle hasn't been broken. There were 2 attempts to break above. Nonetheless, price failed to move higher, making 235 resistance a key level to watch for the buyers, because only break higher will confirm bullish dominance. As of yet, price stays within the triangle. Price is below the moving average, which just show that this is the short-term waiting time, a short-term consolidation phase. So can we break below? Of course we can, but we need a daily break and close below 198. Only then bulls will take over. But while we hold this support area, the probability of the breakout will remain high. And in this scenario, we can either reach $2.94, which is the 40% price increase, or we can go towards the 61.8, which is the 64% price increase. On the other hand, break below this support can push price lower by another 35%. And to summarize, for the CRV against the USDT, we need to take out this resistance in order for the bulls to take over, or we need to take out this support for the bears to take over. Finally, let's move to the CRV against the Bitcoin. And in this chart, we have applied a Fibonacci cycle indicator to this wave down where the price bottomed out. We can see that on each cycle, price reacted accordingly. We had a bearish cycle, bullish cycle, bearish cycle, and on October 3rd, the next cycle will start. This is nearly a 4-month away from now. So whether this bearish cycle will continue, or in fact this will be an upside cycle, yet to be seen. But one thing is clear, is that in order for the price to move up, we certainly need to break above this high, because this is where the bearish cycle has started. So price needs to take out 7,700 Satoshis daily close above, will invite buyers. Right now, price is at the previous supply area, which is now a demand area. There were multiple bounces of this price in the past, and it certainly will be a very important level yet again. But we also must consider that price remains below both moving averages, 50 simple and 50 exponential. Therefore, first bullish sign will be the daily break and close above these moving averages, which is likely to result to retest this high and potentially break higher. Before this breakout occurs, price will either consolidate, or there will be attempts to produce the spikes, or even push the price down towards the 3,620 Satoshi support. And that was all for today, ladies and gentlemen. Don't forget to take it easy and smooth, and see you next time.